Everyone's talking about a housing crisis, but almost no one is talking about this. What if I told you that over the next 2 years, we're likely to see a major divergence not between buyers and sellers, but between homeowners and renters? In this video, I'm breaking down several graphs that show you why we're quietly building toward a future housing shortage and at the exact same time flooding the rental market with supply. So let's dive right in. Let's start with the first chart so that we're all on the same page, and that's the Vancouver MLS HPI index, which is the house pricing index. And you can see that since mid 2024, there has been a great drop in terms of pricing, and that we are sitting now at levels that we haven't seen since the early part of 2023. There's a little bit of a flat line at the latter part of 2024, but we can see that here in 2025, we continue to drop downward. And there's been a lot of issues with this as to why this has happened. We've had so much inventory on the market, buyers have been super hesitant, sales have been down, and that's what's been leading to this continued downtrot in terms of pricing. And we are now far removed from these peaks that we've seen in late 2021 and early 2022. But flip your eyes to the construction side, and that's where the real story begins. And you can see it on screen here. We are down 12.8% in single family construction year over year, 5.8% in condo construction. But look at this, the rental construction is up almost 10%, a full 9.1% over the same time period. And that is a massive divergence in builder sentiment. Builders are pivoting to purpose-built rentals, likely driven by the pre-sale slowdowns and financing challenges, as well as incentives on ownership projects. But here is the kicker. That future inventory that is coming up, it's not ownership supply, it is strictly rental stock. We now zoom in on single family building permits and new condo sales. Permit activity, which is obviously the pipeline predictor of new supply, is plummeting for single family homes. And you can see here on the graph, we are now at levels that we haven't seen at all in the last 45 years. This goes back to 1980, and we are on a trajectory of around maybe 4,000 single family building permits that are coming up on a 12-month basis. And that's not just a dip, that is a signal that future supply is being completely choked off. And that's why I've been so hard on my pedestal telling people, if you can afford it right now and take the leap to get into the detached market, the east side or even the west side of Vancouver, there's so much value, it's buyer market conditions, and eventually there's going to be no single family homes or very little single family homes. So the more dirt that you can own with the land use changes in terms of all the duplexes and multiplexes, purpose-built rentals, everything else, you are going to be sitting on a gold mine if you can make it work. And this is a great time for that. So in terms of the developers are either uncertain, they're over leveraged, or facing too many delays to move forward with approvals on these single family homes. And what about condos? New condo sales are tumbling, not as hard as in Toronto, but still they are notably down. There's an appetite mismatch here. Prices are high, construction costs are up, and investors are spooked by potential rent caps, which we know is going to be 2.3% next year, down from what it was in 2025, and then the tax changes and the interest rate volatility as well. So what does all of this mean? Even if people want to buy the product just isn't coming. And the product that is coming is largely rental focused, not ownership based. And that is going to be a problem moving forward. Now, this is where things get a little bit crazy. This third graph here shows total rental supply under construction, both primary, purpose-built, and secondary laneway homes, etc., as a percentage of existing rental stock. And the numbers, it is huge. Across Metro Vancouver, we're increasing rental supply by 17%. In Kelowna, over 30%, and that's not a marginal increase, that's a near paradigm shift. So why does this matter? And you can see on the chart here exactly what I am talking about here. It doesn't matter where you're looking, even Vancouver Island in Victoria, we're seeing these massive increases in purpose-built rentals. And in the chart here on the left, you can see where we are in the blue line with the single family, but the rentals in orange have just been taken off since 2023. Almost, it's just a parabolic rise. A condo dwellings under construction have just been dropping off. They flatlined here a little bit, but you can see that this is the only real mover here. So why does all of this matter? Especially when we talk about the rental housing, we need all this rental supply. But the issue is population growth is softening here. Immigration targets are being revised. We know that the student visa approvals are currently being capped, and many workers are leaving urban cores due to affordability or remote work. So if rental supply is increasing by 17% or more and population growth is tapering off, then simple economics kicks in. Oversupply leads to vacancy, vacancy leads to downward pressure on rents. And that's just not the theory, it's baked into the CMHC's projection in the final sentence of the chart. You can say here, given the slowdown in population growth, we don't need a big surge in completions to see vacancy rates rise in the next 2 years. So if you are an investor right now, if you're looking to get into the investing space, this is not something that you really want to hear. This is going to be very problematic in terms of your cap rates. It's already so hard to be able to cash flow anything here in Vancouver, and this is going to make everything worse. So let's tie all of this together. On the ownership side, builders are pulling back. We know that in terms of the pre-sale, the volumes are weak, permits are down, and new supply is not keeping pace with demand. That's a slow inventory crisis in ownership housing that is going to catch up with us. On the rental side, which I just highlighted, developers are piling into purpose-built rentals, laneway homes are popping up like mushrooms, and secondary suites are being legalized, and that's setting up for a glut in rental inventory, not immediate, but likely by 2026. Though this may seem like music to your ears, and if you're a tenant, you are licking your chops because your rents are definitely going to continue to drop. But if you're an investor banking on rental appreciation, you are going to have to be very, very cautious. Meanwhile, buyers sitting on the sidelines are going to be shocked when they look in 24 months, 36 months and realizes that pricing didn't crash, but listings dried up and having the adverse effect. We're heading into a bifurcated market. Ownership homes will likely be undersupplied and structurally expensive, not because demand is going to be overwhelming, but because supply simply won't show up. And when it comes to rentals, on the other hand, we know that the pricing is just going to continue to go downward. I think there's somewhat of 20,000 purpose-built rental units that are supposed to come to market very, very shortly here in Vancouver. So that is a ton of units. And yes, we need that housing. Yes, we need those items, but just be very, very cautious if you are wanting to get into the investor space. So what should you do depending on where you are at? If you're renting, you are in a great time. You can negotiate very, very hard. I know that there are many landlords that are advising incentives, a free month's rent, a TV, something along those lines. You're in a very good spot. If you're buying, focus on quality ownership product that's scarce and hard to replicate. You want to be purchasing something here right now in Vancouver that doesn't have any question marks. So good floor plans, lots of natural light, etc. And if you're investing, you got to really run your cash flows and assume no rental growth and even some softening in rents. I shouldn't say some softening, there will be softening in rents. If I'm being very transparent, I know that many investor clients come to me and I state that you may likely get a way better return putting your money in with your financial planner, but there are still places where you can invest if you have a lot of cash. Maybe you've done well in the stock market or crypto space and you wanted to put into a physical asset. As long as you can cash flow or get close to it and you have someone paying the bulk of your mortgage, there is a way for that. I know for myself, the way that I invested with my rental properties, I have children obviously, and moving forward, instead of waiting till I retire and having to take out who knows how much in the next 20 years to be able to help buy them a place, we have a couple rentals, so by the time they finish high school and go into university, we'll have some condos that are close to each other that they can jump into. We won't have to go into our pension. We won't have to go into our savings to help them out. And one of them, it barely cash flows, maybe just a couple $100 a month. The other one, I'm not doing so hot on, but when I reverse engineered it and did the numbers, even though I'm not cash flowing on one of them, I'm able to see that growth, and it's going to save me more than having to pull money out to help with your kids. So if you are struggling in the investment space and maybe you have some extra cash and you want to get into the market, book that strategy call with me. It's in the description below, or that QR code. And like I said, if you're a tenant, this is great. And if you're a buyer, we have this 24-month, 36-month maybe window here to get some really good value before things start to change. And this is the data that shows you things are going to be changing here. Until the next one, thank you for your time.